And so I know that, it's late in the morning and we sort of, to think about more tax changes on medical at this stage is probably just a bit too much. But we just need to remember that these changes are coming 1st of March next year. And just to be aware of what the changes are. So I'm just very briefly going to go through these changes, and then I'll leave you with the slides, and later in the year when this is closer to becoming a reality, you can go back and have a look and just remind yourself as to what the changes are. All right, so we're saying everyone's going to convert to a tax credit system. What will happen, let me just show you this example here, which illustrates quite nicely for a person under the age of 65, what the tax treatment will be. So those of you who are at the tax update last year will recognize this example. I've just updated it with the current medical scheme credit figures. But let's say the person earned a salary of 600,000, he had his pension contributions allowed as a tax deduction, and he's paying 5,506 Rand to the medical aid fund. On a month-by-month basis, he's going to get his medical credits. If we look down at the bottom here, 242, he's paying for himself, his wife, and his 2 children. So he's getting his medical credits each month. Over the course of the year, he's getting medical credits of 9,696. All right, that's on a month-by-month basis, though. At the end of the year, and this is the same process we'd be going through currently, you would be working out what is the excess of his medical contributions over 4 times the amount of the credit. The excess is 27,288. Add on other medical expenses, you've got your 5,1,288. Potentially, currently, that's what you would be looking to deduct. However, you can only deduct the excess over 7.5% of taxable income. All right, so currently, last year and this year, you would be looking at claiming this excess as a deduction. But it comes to 1st of March 2014, you will not be allowed to claim the deduction. That deduction will be gone, deleted out of the Income Tax Act. And instead, you will have to take 25% of that amount, and that becomes an additional credit down here. Okay, so you'd get your month-by-month credit, and then you'd get your additional credit at the end of the year based on what your actual level of contributions is and your other medical expenses. So obviously, if you've got a tax rate of more than 25%, you're going to be worse off under this system. Because currently you're getting tax deduction of 9,663, and let's say you had a 40% tax rate, that's saving you tax 40% on 9,663. But now you'll be getting a tax relief 25% on 9,663. All right, so again, people will be paying generally more tax as a result of this. There's another very important aspect that gives rise to additional tax. And that is because these 2 credits that you claim, or even if you don't get the second credit, if you get only this main credit over here, the amount of the credit that you can claim is limited to your actual tax liability before the credit. All right, so let's say that this taxpayer, everything else being equal, but because perhaps he was running a business at a loss or whatever the case may be, his actual tax liability was actually, let's call it 7,356 Rand, all right? Then it means he could only claim medical credits equal to 7,356. This is the case even currently. And his excess credits can't be carried forward, they simply get lost, all right? So the ability to claim those credits is dependent on the person having tax liability sufficient to offset against the credits. If you don't have enough tax liability, then you don't get the benefit of the credits. Finished. Okay. And you can't carry those credits forward. All right. So the key thing, 1st of March 2014, instead of the deduction, 25% tax credit is coming in. And then, of course, if we look at people over the age of 65, currently they can deduct all their medical expenses, but comes 1st of March 2014, no longer any deduction, they also move to a tax credit system. The tax credit system is just a little bit more lenient for people over 65 and people with a disabled person in the family. And there, just to explain these calculations over here, they would get their monthly credit based on, again, 242 times by the member and beneficiaries, etc. At the end of the year, you would then say, what is their total medical contribution? To what extent does it exceed 3 times the amount of the credit. Instead of 4 times, now it's 3 times, all right? The excess, we get a credit based on 33 1/3% of the excess, and there's your credit that comes through. And if there's any additional expenses, out-of-pocket medical expenses, instead of getting a full deduction, we get a credit equal to 33 1/3% of that amount, which comes through. Again, it's all very well saying we've got this credit of 14,667 for the year, but if you don't have a tax liability of 14,667, you're only going to get the amount of the credit up to the amount of your tax liability. So if you have a very low tax liability one year, and then the next year your tax liability goes up, well, you've lost out on the credit in year 1. You can't carry it forward to year 2. Okay. And that treatment that I'm showing you here is pretty much the same for your disabled person. So I've got an example here as well with a lady who has a son that is disabled. But I think you get the picture, and I don't want to overwhelm you with technical stuff that's only coming in from 1st of March next year, but just to give you an indication of what is coming. Okay, so there's the calculation for her. Exactly the same type of calculation as we saw for the person over the age of 65. All right, so no longer any deduction.